everybody. Welcome back to the One Step Better podcast with Mike and with Matt. Hopefully, you guys are having a great day today. Today, we're going to talk about something more common, more pressing here recently than it was maybe 10 years ago, and that is multi-state stuff. So I decided to open a branch in a different state. Maybe I hired somebody in a different state. Maybe I'm now just selling to a different state. What are the implications from a tax financial standpoint when that happens? So that is the plan for today. Before we do that, though, Matt, got a question for you. If your hands had to get replaced with a different object, what object would you choose?
Hands. No.
Prosthetic hands.
Fake hands. I don't want to have, I would say some kind of claw of some kind, at least, so I could pinch and turn. I think, like, I'm thinking like pliers, but like something I could grab stuff with, because I think you're going to need to.
Yeah, you need at least like 3 points of contact.
Like maybe 5 fingers and a hand that I could grab together. How about you?
Yeah, so I would have maybe a drink dispenser. So a question that my kids ask.
Which question? Which
is you got 5 fingers and every finger now produces a different liquid. What 5 liquids would you choose?
What's yours?
So that's a separate question. So we can only
stay tuned to the next episode.
That's right.
We're talking about the 5 liquids you'll have.
There you go.
If you had to.
That's our question for the next time.
That's the next episode.
So I'm going to go.
So
drink dispenser. Stay tuned.
Yep.
All right. Jumping into multi-state stuff. So anytime that I maybe hire an employee in a different state or perform work in a different state, it does create some tax considerations that you typically have to think about. What is going in your head as you think about multi-state stuff?
The first thing I think of is people don't realize a lot of times that first remote employee, or that you decided to store some, inventory in a warehouse, and it just happens to be across the state line. What we see most today is remote employees. I mean, it's a big thing. And that is just like that employee is open a little office in that state. And you have probably triggered more filings than you realize. So that has created a complexity that now you got to go through all the tests, figure out what's you're responsible for, or what you're not.
Yeah, it's difficult because every state's a little bit different.
It is.
Every state has a little bit of different rules, and so I may have, an employee that is working in Mississippi, but they live in Tennessee. Everything I do is in Tennessee, but they just happen to go pick up a job across state lines. They've been an electrical contractor, and they just, they went and did something across state lines. Is that enough for me to now have to pay tax over there? And what does all that look like? It gets really confusing, and Mississippi's rules are different than Arkansas's rules.
Yeah.
Which is different.
What's the service you're providing there? Is it taxable for sales tax? So in Mississippi, most electrical service contractors, as an example, that's a taxable service in Mississippi. That's not a taxable service in Tennessee. We're right on the border of Tennessee, Arkansas, Mississippi. This is not necessarily I've even have somebody living in those states. Now I have somebody just lives in Tennessee and working in those states. How many days does it matter? All those complexities really are a challenge for most business owners. You start talking through online retailers, like what's taxable for sales tax? How many times can I sell one product to that state before I'm now subject to sales tax in every little location I'm selling to? And so this is a very challenging issue, particularly with our workforces that are going, more and more in our industry, particularly, to remote workforce. It's a big deal.
So the technical term here is nexus.
It is.
So when you establish nexus in a state, the dominoes start to fall from a compliance standpoint. It is difficult to keep up with all of the rules to establish nexus. So as an accountant, somebody that is helping businesses navigate these issues, what resources do you use to try to stay up to date on what should trigger?
So Nexus is always based off of one of 3 factors. It's not all those three factors trigger nexus, but when you're determining whether nexus applies, every state uses one of these three things. It can be, do you have an employee getting paid in that state? So you have payroll expense in that state. That's going to trigger nexus. Do you have physical property or rented property or stored property in that state? That is also the second factor. So property in this state. So if you rented a location, or you had inventory dropped into a storage warehouse, or even just put a storage building in that state, say that you're storing old computers in, you probably have nexus. And the last one is sales. So sales in that state. Sales by itself generally doesn't trigger nexus, but it can trigger nexus. And so this is where you start running into which states are different. So I want to know what you have going on in that state. If you're a service provider and you are not having a person there, and you not having any physical property there, and let's say I'm doing work for a business in Kansas, I may have nexus, I may not. If I go and work in Michigan, I'll tell you, Michigan, you're going to trigger nexus. So you have to kind of think through what's going on in that state, and then every state we have to go through the nexus test for that state, and a lot of times that local jurisdiction as well.
Yeah, and it gets confusing, it gets cumbersome, it gets complex relatively quickly.
Mm-hmm.
What are some of the downsides? If I get this wrong, what are my consequences?
Like anything else, that tax band cometh. You have potentials for, let's think through some of those taxes, right? You're going to have income tax liability. Generally, some portion of your income will need to be allocated or apportioned to that state. So let's say you made $100,000, and we've done the math, and 5% of your profits are arrived by that person that, or property or whatever, the allocation that goes there. I'm going to have to pay 5% of my income. So I'd have $5,000 that would now be taxable in that other state. That's the first of many tests, though. Do you have sales tax in that state? So are we collecting and remitting the taxes that are required for that state? You have payroll taxes in that state. You have unemployment you have to file in the home state of where the person lives. You'll have to have payroll withholding most of the time, depending on the state they're in. And then you also have, more than likely, you'll have to register your business to do business in that state as a foreign entity doing business in it, in and out of, not your traditional state. So there's a lot of little stupid stuff that has to happen when you put one of those three things, sales, property, or people, in another state than your home state right now.
Yeah.
As you can tell, this is a complicated issue. It is something that it's not like, well, and I'll worry about it when it comes up. They will figure it out. It's not hard to figure out. You have too many other filings telling them that there is a requirement for me to do something in that state.
Yeah, I think people that struggle with nexus issues, I think it comes out of a place of ignorance more than anything else. I say nobody. Most people aren't actively trying to get away with something.
No.
It's. I remember. A long time ago, I worked at a battery co-op, and what they would essentially do is they would do drop shipments. So if you were a battery supplier, I could buy your batteries and have them shipped to the places that my co-op members. It's kind of like a purchasing club, and the co-op then unknowingly established nexus in a whole bunch of states. And they did not
inventory
have any clue.
Yep.
Until I believe it was Maine. It was Maryland. It was some state that sent their notice. Hey, I think that you have activity here. Give me my money.
Yep. That's how it always works. We've had clients that have, I didn't realize I did an installation job in Olive Branch, Mississippi, which is 30 minutes from Memphis. Yeah, how many days were there? Well, they were only there for like 3 weeks. Well, 3 weeks out of 52, they now had people working in the state of Mississippi. They have sales in that state. They have nexus. And, how you report that for payroll? How do you report that for your income tax? What is the entity even registered in that state to do the work? So what about your workers' comp insurance? Are you licensed in that? Like, there's all kinds of things that are tied to this. where they're working matters, where they live matters, what is going on in that state matters.
Yeah, you almost kind of need a checklist of all the things like, hey, I want to now start to sell, or maybe I want to hire somebody in this different state. Kind of need a checklist of all the things I needed to account for, and it's a growing problem.
Yep. And I would say, when this happens when somebody says, hey, we are talking about hiring a remote employee, great. There are some states that we try to stay out of, in general, just because of extra complexities, extra nexus issues. I'd say, the tax rate there is crazy. We have some states that we will not hire people from in general for our remote team. But on top of that, this is a conversation you're going to want to have with your accountant, probably going to want to have with your attorney. The first remote employee, there's a lot of things going on anytime you're talking about IT, security, all the other things, but the tax and financial aspects of this is also super important.
Yep. Well, good stuff. Any kind of best practices, tips, tricks that you think of to help business owners kind of navigate this issue?
Yeah. The moment you realize you're thinking about hiring remote employees, start having conversations. And the second thing is, once you've decided who that is, don't wait till they're hired. Like, let's get everything in order beforehand, because you may even have like certain benefits you have to require. There's all kinds of things that go on when you're adding another state that you're not used to, or not. There's a whole bunch of other things that go on with that. So
yeah, from a hiring standpoint, I think about it is becoming more and more popular to look for remote employees, people that are not based in my home state. They're going to work from home. And if I just publish a job ad anywhere in the world, hey, you can work wherever you want to work. That may not be the most wise thing to do. I might want to have a little bit of thought that goes into that. Like you mentioned, there's some states that we don't hire remote employees in. And it's really, a lot of that is because of the compliance challenges that come with that. California and New York are places that we generally will not hire from, just because of all of the dominoes that have to fall, things you have to keep up with. It's just not worth the hassle.
Yep.
And
I mean, I had a client of mine, I talked to yesterday. They're looking at hiring their first international employee. I said, employee or contractor? And they went, I said, we probably need to have a conversation.
Yeah.
So there's all this stuff is changing rapidly. Anytime you're bringing on somebody who's not in your physical location where you are, you should be asking lots of questions.
Yep. And if you don't know what questions to ask,
that's what we're here.
Just raise your hand and say, hey, I'm thinking about doing this and I don't know what questions to ask. And that is a great first question.
Yep.
So thank you guys for listening. If you have any specific questions about Nexus and moving into different states, reach out. Let us know. We'd be glad to help you walk through those things. Have a great day.